It's Alex Cooper here. I help you break the shackles of Wall Street, keep your money, and reach your financial goals. Today I'm going to talk about mutual funds and why it doesn't make sense to put 1 penny in mutual funds. Because investing in mutual funds is the biggest lie that Wall Street has told you and a lot of financial advisors. So here's the reason why. About 90% of mutual funds underperform their benchmarks. And what does it mean to you? Because they underperform their benchmarks and they usually trail their benchmarks by 2 to 3% on average annually, then we know that the S&P has averaged about 10% in the last 80 to 90 years. So when the mutual funds underperform by 2 to 3%, you're looking at about 7 to 8% return. And when you factor in the costs, the fee that the mutual funds charge, which is about 1.5%, and another 1.5% that you pay your financial advisor to help you pick a mutual fund, then you're looking at really about 5 to 6% return. So in dollar terms, it means that if you invest $100,000 over 30 years in a mutual fund, that money will grow to about $600,000 in 30 years. Not bad. But had you invested that money in an S&P index fund over 30 years, your money, your $100,000 investment, would grow to about $1.6, $1.7 million. So you're leaving about $1 million on the table simply because you were told to invest in a mutual fund. Now, what are the reasons why mutual funds underperform? They're under a lot of pressure from investors to deliver results short term. So that makes them take short-term bets, and by doing that, they incur trading costs twice, once when they buy and once when they sell. And short-term capital gains. Short-term capital gains are taxed at 35%. So when you pay Uncle Sam 35% on your gains, you're not really using a prudent way to grow your wealth. Now, because they have a lot of pressure to deliver short term, they jump from investment to investment. And I've seen mutual funds have a high turnover as high as 400%. So their holding period, they're turning over their portfolio 4 times every year. So their holding period is about 3 months on average for some mutual funds. So that's a big no-no in investing. Another problem that mutual funds have, and this is a double-edged sword for mutual funds, it's the redemption dilemma. So if they stay in cash and they have some cash, then they're not taking advantage of opportunities that come along. But if they don't do that and they're fully invested, then when they're faced with redemptions, they would have to sell, even at a loss, to satisfy redemptions. Or, had they been in cash, they would have to satisfy redemptions when it would be the right time to buy bargains when they go on sale. There's a lot of confusion. There are about 3,800 publicly traded companies in the United States. And we have as many mutual funds out there. So for you as an investor, it's hard to know which mutual fund is the right one to invest in, because of the overlap, and a lot of these mutual funds are invested in the same companies. So when you're invested in, say, 8 to 10 mutual funds, you're not really diversified, because you could be holding different mutual funds being invested in the same securities. Last problem that I see with mutual funds is the fact that there is no really an alignment of interests between the mutual fund managers and yours, because very, very few companies require their fund managers to have skin in the game, to invest their money along yours. So what's the solution? There are 2 options that you have. If you want to invest and you have no time and you just want to be invested and avoid all this, you can buy an index fund and be a passive investor, and you get whatever the index does. Or you can be an active investor and pick individual stocks. Now, pick individual stocks requires time. So if you have the time to do the research, if you have the inclination to research, then you can do it. You don't have to be a genius to do well in investing. I hope this helps. This is it for today. Don't forget to subscribe, comment, and share. Until next time, have a good one.